YouTube? Welcome back to the Wealth Catcher channel. I'm glad that you guys are able to stop by. Hope y'all doing well. Without further ado, we'll get right into it. So, as we know, this past week or two, definitely seen some volatility in the market, but we are also still very much so near or at all-time highs, depending on what index you look at. So today's video, we're going to check on some topics that have been interesting me for the past couple of days that I've been trying to keep track of, things like that. So definitely be seeing that software is being hit right now, pretty weak since Anthropic has released its latest model. And then for market participation, we see that it's broadening, so there's more breadth in the market right now, but the S&P 500 is down on the year to date. So that's actually a pretty interesting thing to look at. And then we're going to speed run through the major indexes, see what the charts are telling us, how they look. And last but not least, we're going to go check on our friend Bitcoin, make sure he's all right in the corner over there, and see how everything's treating him. So let's go ahead and dive into this. Don't forget to please like, comment, subscribe, and leave any comments or any suggestions down in the bottom for me. And definitely looking forward to hear from you guys. Let's go and look at the charts. So what I got up here is the IGV. So that is the software sector ETF pretty much. So in there you got some heavy hitters like Microsoft, Palantir, ServiceNow, things like CrowdStrike, Palo Alto, and Oracle. So think of everything as your software as a service type subscription models type business. So when Anthropic had dropped their newest model, it took a big hit in terms of how the market reacted to it. So it's great for Anthropic, but for these specific companies and then these companies that operate in the software realm, it looks like that model took a hit on them, basically showing that if I'm able to do all these things in this model, do I really need to pay these heavy subscription fees for these services? Because the SaaS model, the software as a service, it runs off of a per seat basis. So if you have 100 employees, each subscription probably costs $100 per person, obviously depending on how large the company is. And then for some companies, they just buy it for the whole company, even though not every single employee needs it. So this new model from Anthropic could probably cut those costs or eat away into the profit margins for these companies. So for companies that are solely relying on the software as a service model, and that's their bread and butter, they're obviously going to get hit. It's obviously going to hurt them the most. So we're going to probably see the companies that do survive this. I also want to do a next video or another video on the best companies probably to weather this storm. It's going to be people who have, and firms that have the situation where it's like they're more outcome based. So that's how they make their money, based on I made you 20% more productive, or I helped your company grow by 30% year over year in revenue. So more outcome based production versus I'm just taking your money per seat or whatever the case may be. So the firms that are able to navigate this the best, obviously the ones that's going to win out and make it through the end. But if you're just solely relying on per seats, that's where the damage is going to be going. So obviously some people are going to say it's an overreaction, but it definitely did raise some eyebrows, took a huge hit, and the chart obviously shows it. So this is our daily chart here. What we see here, that sell-off obviously came into the year not strong anyways, but started off going down, definitely hit that 400, but then with that sell-off, around when the news came out, you see a gap down, and then just further down, did bottom out right around here on February 5th. So did bottom out, kind of got a little more life to it, but it's probably going to be stuck here for a while. We'll see how it goes in terms of how many people go pile back in to buy it. But we see it's in that oversold territory, drop below 30. And then we see the MACD, the histogram lined up on it. So that momentum or that strength of the selling off has definitely died down. But this is where it's at on the daily chart. So beneath all the moving averages, pretty much in no man's land. We'll see how long it will take there. This point of resistance, if this 50 starts flattening out, it's going to be pretty much the 50 or the 400 day. When it gets past the moving average, then you can see some more bullish momentum to it, but it does have a long way to go before getting there. And then on the weekly, we can see on the weekly, it dropped all the way down to that 200 and to that 253. You can see right there. Let me see, zoom in a little more. So yeah, that grayish line, that's the 253, and that purple line is the 200 on the weekly. So we see that fell there, touched it, fell there again, and touched it. So double tapped it. RSI still very undersold, and then the MACD obviously is stronger on this, but we're seeing it short term on the daily that it is looking like it's bottoming out. So that's the software play on there. But again, something to keep an eye on if you are someone that's a fan of one of those companies. This could be a great opportunity for you. We've seen some names like Microsoft, great names like Palantir, CrowdStrike, Oracle, Palo Alto. They have their own personal stories going on, but this obviously didn't help them and put them at more attractive prices too. It was something that you're looking forward into getting into. So it's kind of probably could be a blessing in disguise. But again, it's the stronger companies that could navigate that. Something like a Microsoft could navigate this type of news. Something like a CrowdStrike, Palo Alto, their cybersecurity. And it's pretty tough to be like a LLM model like Anthropic, something like a ChatGPT could do a cybersecurity when we need cybersecurity to basically secure the AIs. So I'm not saying it's impossible. Eventually, there might be an AI company that comes out that does cybersecurity only and all that. But for now, we need companies like like CrowdStrike, like Palo Alto. So they took a hit based off of this news being a factor and part of all this, but also there's something that you can also go ahead and look into due to the fact that they're part of this quote unquote software sector, right? So next thing I want to tap into is the dynamic with the S&P 500 being down, but we do have market participation broadening, right? So we're going to look at the SPY, and the SPY is down less than 1%. I think it was like 0.28% when I last looked at it to close out the trading week. But we see right here that we're at the 100 moving average on the daily, like right there. And we've seen that we hit it before, roll up, try to do something, fell back down. This is kind of like your doji candle. So usually that candle, if you look at it, it could be like an indecisive candle. So basically we don't know which way we're going to go next. Buyers and sellers kind of were playing tug of war, and it basically was a tie. No one really won out in that one. So hit a 100. Obviously, that's definitely a key moving average to see how anything will react. Obviously, if it goes down the next leg here for the 200, that's 648.67. A lot will probably need to happen for that. We got to pretty much keep up with catalysts, anything that's coming up that could probably change that. So far down the pipeline, I don't know what really could change that. We already know about the new Fed chair announcement, and we already know about the likelihood of interest rates. So the only thing we could probably expect is something probably, out of left field that the administration does that we don't expect. But right now, I pretty much expect us to kind of be in what I like to call the messy middle. So I like to call that probably like, close to the second quarter, going into the second quarter and third quarter of the year is kind of real low key and quiet. Not a lot going on. We're definitely going to see volatility probably spike towards August, September, because those are usually historically the worst months. That's when we'll start seeing more volatility and things like that. But again, that's granted if nothing happens majorly in terms of announcements or anything crazy news-wise that comes out. But you're going to see through our indices like the S&P 500, like we're going to be pretty much range bound. It's pretty much range bound. It's not, it's going up and down, but it's like nothing volatile, nothing crazy. And then this is a good baseline here to hold on to because as you can see here, even back in 2025, we hit there, bounced off. So the 100 is pretty safe area right there. But again, fall past that, we can fall down to here, right about here. That's at our 652, and then obviously to the next moving average, right? So we see our RSI is pretty much neutral, and then MACD it is curling downwards to show some momentum to the downside. Histogram is a dark or a deep red, so there is some momentum to the downside, but nothing crazy, nothing too, I would say, concerning, right? So then that's the S&P 500, and then let me go look at the weekly real quick to show that. See what we see over here on the weekly. Just to say again, we're still, pretty much near all-time highs. So with all the volatility you may think there is, I know VIX went over 20. That's kind of an indicator of, a fear gauge. But we are still near all-time highs. So it's nothing, I would say, too crazy. It's more so there's, fear-mongering, things like that. Nothing has been broken. Nothing has changed yet story-wise. Probably some cracks, probably the same worries, the AI fears. And again, like I said, we had that thing with the software go down, all that type of stuff. But the market is still in a strong place, in my opinion. And then you can see here, still well above all the moving averages. When if or when it touches the 50, that's when we kind of start raising some eyebrows, start being like, okay, what's going on? But if it stays in this stagnant mode, it's been in this range right here, it's probably going to be the 50 is going to end up rising up and catching it up to it versus it falling down to the 50. So if the 50 rises up and catches up to it, that just means we've been range bound for a long term, and the 50-day moved up and caught up to it. But same thing, the RSI, we have 57, so curled down a little bit towards neutral, and same thing, MACD, it's curled down in terms of going toward the downside, but still pretty weak, pretty faint on there. But to go back onto what made this interesting for me was we have the S&P 500, which we know is market cap weighted. Then we have something called the RSP, which is equal cap weighted. So everything inside the RSP is equally weighted. And for this one, they just hit a new all-time high February 12th. So on Thursday before the market closed on Friday, they hit a new all-time high. And then for them, everything inside that ETF is equally weighted. So it's not heavily weighted towards the Mag 7 or to the Mag 10, whatever you want to call it nowadays. So it's showing that the rest of the market is also participating. The other 490 companies are still, producing results, and people are now investing in those, in this broadening out. So this rotation coming out of the Mag 7, Mag 10, as we can see, you've been paying attention to the Nvidia's chart. That's been range bound for a while. We got big names like Microsoft. They're down about 15% this year to date. So definitely some rotation coming out of those names that we've been following for the past 2-3 years, and everyone's been putting their money into. A lot of profit taking, and then like I said, a lot of worries around it. But something like the RSP, they're up about, I think, 5 or 6% year to date. So that's just a good sign to show that there's still strength in the market. It's just probably not in what you're expecting or what you're looking for, right? So RSP is a good name to look into if you want to still get some gains, but don't want the volatility or the risk of being just the S&P 500. Then we go ahead and take a look at it on the weekly chart. Again, here you see nothing but just grinding up, still well above all moving averages. It's in that overbought territory. RSI is at 70, and then we got the MACD pushing up to the upside for it. So I just thought it was a interesting name to look into while people are, being afraid about the S&P 500 and what's going on in the market. But again, we're still near all-time highs. You can't imagine what it's going to be like when it falls to 5%, 10%. When it starts eking towards those percentages, 8%, 10% drop, then, the fear could probably be reasonable. People coming out with the headlines, stuff like that. But like right now, There's this uncertainty that's building up, but when you zoom out and look at everything, market is still okay. So let's go ahead and run through the rest of the indices. You know about this, another index that hit an all-time high. Do not like this index, but I'm actually surprised by it. This is the Dow Jones. So you see here a couple days ago on the 10th, hit a new all-time high. Sold off a bit from that. Has the same doji candle as we saw in S&P 500. So obviously, because they have some names in there, this is the dollar weighted index. So obviously, the higher the share price of a company is, the more weight it has. But for them to hit an all-time high, pretty impressive, pretty good for them. But again, something I don't like personally because of how it's structured. But something good to keep a look into. And then we do see that the MACD is neutral right now, but look like it's curling down to the downside. And RSI is at 52. So we'll go ahead real quickly, go over to the weekly. So weekly, same thing, still above all major moving averages. RSI is kind of trying to get up there, but didn't quite break it. It's at 63. And then MACD is pretty much neutral. But you can see here what I mean by momentum. It's the same picture that we saw in the S&P 500. Everything's kind of just like in a range, but it's still climbing up. And then let's go ahead, look at QQQ, which we would expect. You know, S&P is down. QQQ, you know, definitely is going to be more volatile since it's more tech-based, and that will definitely be down. So on the daily chart, obviously QQQ is not a deal. We're underneath the 100-day moving average. It's a key moving average. So that screams deal to me. Even though on the weekly, when we go to the weekly, we're not going to be near that. But on the weekly, I mean on the daily chart, this is a deal. If you want to go in there, nibble, start a position out. So something I would do. Again, this is not financial advice. This is just for informational purposes. So just sharing what I see and things that, you know, intrigue me on the charts when I look at it. But this right here, for me personally, as I look at it, it's screaming, you know, hey, good opportunity to look into it. Probably start a position. And obviously we got our next point here, 581.27. That's the 200-day moving average. Let me see, our RSI is at 40. So we'll see if it is going to continue to tank towards the oversold territory, but it probably reached a point here. This is not a doji, but as you can see here, it's pretty similar to how the S&P 500 was and the Dow Jones was. And our MACD is still showing that strong sell-off momentum down there. And then we go here and look at the weekly on it. So weekly, same thing in terms of chart structure, that range bound, but this one obviously shows a little more selling pressure to it. You can see by the MACD how it's pretty much more spread out and how the histogram is ticking up more with it, right? And then same thing, we have a better line for RSI showing still neutral, but we do see momentum heading towards the downside. But again, this is not in a deal area on the weekly chart. Daily, yes, but weekly, no. Still have a ways to go before we hit any of these key points here. For me, 50, a lot of people will consider that. That's the 561.71. But me, 522.70. So $522.70 gets to that. Because we do know the QQQ falls more and faster than it would for the S&P 500. So let's say the S&P 500 touches the 50 or 72, QQQ most likely will be at the 100. So then we're going to close that out with the settings. Close it out with, for the indices, IWM, which has been pretty decent on the year. I think they're up about 5% year to date. So small caps, but definitely we knew that with the interest rates starting their cuts since last year, we knew that small caps would have been a winner because it's a more favorable environment for them. They could, borrow money for cheaper. So we can see here, it fell to the 50 to start the month off, rolled back up, approaching the 50 again. Safe to say, most likely will touch that and probably bounce again. But same thing, RSI is not doing nothing too crazy. That 52 pretty much neutral. And then our MACD is showing some downward momentum, but nothing too crazy, nothing too concerning. It's just showing that this is more so like a rounded top over here. And then again, touches the 50, we could probably see it bounce off it and climb back up. Let's go see what it looks like on the weekly chart. So on the weekly, very range bound, as you can see here. Very trading within a range, even though, it hit a new all-time high back in January, so almost a month ago. But definitely still range bound on here. So for this, we're going to have to see it fall to 228.56. So that's the blend of the 50 and the 72 for it to be favorable for me personally as an entry. And the next would be 222.31 for that entry right there. So RSI, it's not overbought, but it's getting up there. It's at 63. And the MACD for this part, I'll consider this pretty much flat. MACD, so showing really no momentum to either side. But IWM, for sure, on the daily, here's that 50, might turn back around, but this is a name where if you already got into it, way back here, again, Liberation Day, IWM is one of those names where it's a small cap. A lot of people don't pay attention to small cap stocks, but when they run, they do run. So they do have a great ability to make an impact on your portfolio, depending on your allocation for it. And again, to close out, we are going to check on our friend Bitcoin. I just saw on CoinMarketCap they finally broke past 70,000. So that's a bullish sign, getting past another psychological threshold. But we did see that Bitcoin did fall more. So see it fell down to 65,200. A lot of people obviously didn't like that. The fear mongering came back in there like, hey, it's going to go to zero. It's going to go to zero. Again, this is one of those names where I say, still just hold on, buy what you can, hold it, act like it's not there. Sending for my son, he has the exposure through the ETF, FBTC. He was about, I think, 120%, 130% in profit on it in terms of the gains he had on it. And now he's sitting at, I think, 30% in gains. So, yeah, I didn't sell anything. Quote unquote, the market took it back, whatever. But no, it's just there. And if it falls back to my cost basis or falls below it, we're just going to buy more of it. That's pretty much what it is. He's, like I said, he's 3 going on 4. If Bitcoin is what it's supposed to be in terms of like it's going to be here 10 years from now, 20 years from now, it's going to be over 100,000. It's going to be over 200, 300,000, whatever it is, right? Wherever it's projected to go to, whatever. Same thing with the market. I look at the market's going to be here 20, 30 years from now. So it's not a big deal to buy at the prices that they are now because 20 years from now, you're going to wish it's at the price it was today. So that's for any asset that appreciates over time. So that's, again, for, your broad market funds, your S&P 500, your Dow Jones, your QQQ, your IWM for the Russell 2000, stuff like that. I'm not saying for single stocks, this and that. Yeah, you have your winners, but you don't know how dominant something's going to be. Like my son's portfolio, it does have individual stocks in there, but not saying they're going to be stocks he's going to hold until he's 60 years old. I do expect at some point that allocation will change. Some things will get sold off, but the period of holding is going to be 10 years, 20 years. Then you probably make an adjustment for it, right? So for something like this brought you all the way back to, I think 2021, 2022 prices. We go look on the weekly. So yeah, brought you back to around here. What's that? 2024. Yeah, this is 2024 prices. So not quite 2022. Definitely exaggerated on that one. But yeah, we're in 2026 now. This brought you back to around September 2024-ish, around that area. Yeah, it's not bad. So then you get into another opportunity, and then as you see here, how we have this gap here, went further down in there, and then went down to here. Let's see, 67,500, and then our low for this one, 65,200. So definitely not bad. Looks like it went a little further down. So basically, this candle right here is where it stopped at. And it looks like it probably will reverse back, but who knows? That 200 is sitting right there. That 200 is 59,535. Could definitely go to it. We'll see if it does happen. But yeah, we got the RSI saying, hey, I'm oversold here. I'm hated right now. Buy me. Same thing. MACD showing some strong downward momentum. Histogram's that deep red. But seeing those things right there, I don't look at it as why not, right? I'm not saying dump your whole life savings into it, but when you see these opportunities and these moments to buy, quality names, when we go back on the software, when we go back onto, names like this, Bitcoin, use it as an opportunity to buy more. So to close out, we talked about the AI software repricing. So definitely these companies are gonna have to look at their business model probably. Whoever can adjust is gonna be the ones who win out. Definitely gonna, put it on the big dogs like Microsoft, CrowdStrike, cybersecurity companies, people like that. I feel like are a necessity. They're gonna be able to adjust and figure out what to do next. We talked about the rotation into the broader market, so definitely keep an eye on that RSP for equal weight, still showing that there's participation from other companies in the market. We're not getting caught up in still the Mag 10, Mag 7, and potentially, hey, as crypto found the floor, we don't know. We'll definitely let time play out. Again, person who's hurting, guy who bought up here 126 and it went all the way down to 65K. He's the one that's hurting. You don't want to be that guy. You want to be the person here who's buying at those lows. Because remember, we're still about, 43% off from the high. So definitely a good deal. And then just keep in mind, too, for the overall market, we are still near all-time highs. So again, you start hitting towards that 8%, 10% down. We got a movie starting. Things are, turning up. You start seeing that big spike up, to 30, 40, stream volatility, fear and greed index. I put that every month in the watch list at the beginning. Fear and greed index starts touching that 25, starts touching 30s, 18. That's when you start. I remember, I think last year it touched 4 at some point, or 8. Beautiful. You got in around those moments. So definitely keep in mind of all those things. Again, do appreciate you guys stopping by and checking out the video. Please don't forget to like, comment, subscribe. Leave any comments down below. Again, the email is thewolfcatcher@yahoo.com. And again, the website link will be in the description in case you want to see the site. Watch list is out for this month for prices. Pretty sure there are some names on there that price points have already been hit on the daily chart for them. Probably even some of the weekly. And then I did a quick look. Some of the names that were added at the top of the year. So we got names like Caterpillar. They're going crazy right now. I think they're up above 20%. Trying to think of who else. Yeah, Caterpillar was one of the ones that stuck out to me. No, they're up about 20%. They're doing pretty good. Disappointed in United Rentals. Only up about 2% right now, but we'll see. We'll see what happens with them. Oh, PWR is up almost 20%, 19.2%. Micron still doing this thing, up 30%. Caterpillar is up 29%. So sorry about that. So definitely check in on that watch list. See some names on there, some quality names. And we'll hear from y'all later. All right. Talk to y'all next time. Don't forget, catch and secure your wealth. Y'all have a great night.